Recessions are an inevitable part of the economic cycle, but many people remain unprepared when the next one hits. Understanding the risks and being proactive are essential for weathering economic downturns. In fact, based on a report by the Federal Reserve, 63% of Americans would have to rely on credit cards, personal loans, or borrowing from family or friends to cover a $400 unexpected expense. This lack of preparedness can leave people vulnerable to the financial turmoil caused by recessions, such as sudden job losses or rising living costs. As we have seen time and again, ignoring these warning signs can lead to deeper debt, stress, and long-term financial instability. In this video, we'll run through actionable steps you can take now to protect your finances. You'll learn how to build a recession-proof strategy that safeguards your financial future, like strengthening your emergency fund and paying down high-interest debt, even securing your job and investing wisely. Check out the full details by visiting the link in the description. Number 1. Strengthen your emergency fund. Economic uncertainty can lead to sudden job loss or pay cuts. Having an emergency fund with 3 to 6 months' worth of living expenses can be the safety net you need to avoid spiraling into debt. Unfortunately, a 2024 Bankrate survey found that 59% of Americans can't cover a $1,000 emergency expense. The goal is to not be part of that statistic. Building your emergency fund, even on a tight budget, is possible. Start with small, achievable savings goals, like saving $50 a week. Automating your savings can help make it consistent. Temporarily cutting back on non-essential expenses like dining out or entertainment will speed up the process and add to your security. Number 2, pay down high-interest debt. Debt becomes more challenging to manage when your income is uncertain. High-interest debts like credit cards can trap you in a cycle of payments that become difficult to maintain during a recession. To make things worse, rising interest rates can increase your debt load, making it harder to get ahead financially. To avoid being overwhelmed by debt, prioritize paying off high-interest obligations first. The avalanche or snowball method can help you tackle them strategically. Consider debt consolidation if you can lower your interest rate, and try to avoid taking on new debt unless absolutely necessary. Number 3, secure your job and explore recession-proof employment. Protecting your job during economic uncertainty starts with becoming indispensable. Learn new skills, volunteer for projects, and stay flexible in adapting to change. Being a valuable asset at work increases your chances of staying employed during tough times. Staying informed about industry trends and networking with professionals can also help you stay competitive. Consider exploring recession-proof jobs or side hustles to diversify your income. Industries like healthcare, education, and essential services tend to remain stable during downturns. Starting a side hustle like freelancing or gig work can also provide additional income if your primary job becomes unstable. Number 4, review and adjust your budget. Creating a recession-proof budget starts with separating your essential expenses from the non-essential ones. Identify necessities and cut back on luxuries. For example, the average U.S. household spends about $3,000 a year dining out. Reducing this habit could free up a significant amount for savings or debt repayment. Be smart with your spending by seeking out discounts, using coupons, or buying in bulk to maximize value. Take advantage of cashback and reward programs to stretch your dollars further, but be mindful not to overspend just for the sake of earning rewards. Number 5, invest wisely during a recession. Recessions can actually be a good time to invest if you have a long-term strategy in place. Stocks often drop in value, allowing you to buy at a discount. One smart strategy is dollar-cost averaging, where you invest a fixed amount regularly, which can help balance out market volatility over time. It's also essential to diversify your investments to minimize risk. A balanced portfolio that includes stocks, bonds, and real estate can help weather economic downturns. Adding safer assets, such as bonds or gold, is another way to protect your wealth, as these tend to hold their value when the market is volatile. Number 6, stay informed and take advantage of government resources. Understanding economic trends can help you make informed decisions. Keep an eye on key metrics like GDP, unemployment, and inflation to gauge the economy's health. These indicators can guide you in adjusting your financial strategies accordingly. During a recession, various government resources are available to help. Programs such as unemployment benefits, food assistance, or stimulus packages are designed to support people facing economic hardship. Be aware of what's available and apply if you qualify. Number 7. Take care of your mental health during a recession. Financial stress is often one of the biggest burdens during a recession, and it can take a toll on your mental well-being. Preparing ahead can help reduce this anxiety and bring some peace of mind. Managing financial stress starts with self-care. Establish a routine that includes mindfulness or activities that help you unwind. Avoid checking financial news constantly, as it can heighten anxiety. If things feel overwhelming, consider talking to a financial advisor or counselor for professional advice and emotional support. Number 8. Build multiple income streams. Relying solely on one source of income during a recession can be risky. Job losses or pay cuts can happen suddenly. Building multiple income streams gives you more security and financial flexibility. Creating additional revenue streams might mean starting a side hustle. Freelancing, consulting, or selling products online are great options to explore. You can also look into investing in income-generating assets like rental properties or dividend-paying stocks. Number 9. Create a recession-proof investment plan. Having a long-term investment plan is essential, especially during a recession. Diversify your portfolio with stable investments like bonds or real estate alongside riskier ones like stocks. This helps balance potential losses while still allowing for growth. It's also important to avoid panic selling. When the market drops, selling off investments often locks in losses. Stick to your strategy and stay calm, remembering that markets typically recover over time. Number 10. Improve your financial literacy. The more you understand personal finance, the better decisions you can make during an economic downturn. Financial literacy can be your biggest asset when managing money becomes critical. Take the time to improve your knowledge by reading books, taking online courses, or following trusted financial blogs. Podcasts are another great way to get ongoing tips and insights without overwhelming your daily routine. Before we continue with the video, take a quick moment to hit that like button and subscribe if you haven't yet. And don't forget to ring the bell for notifications so you never miss out on our latest updates. Plus, we've got some helpful resources in the description. Check them out and share your comments after you're done watching. Number 11. Plan for healthcare costs. Healthcare can become a financial burden, especially during a recession. Planning for these costs will help you protect both your health and your wallet. Start by reviewing your health insurance plan to ensure you have the best coverage at an affordable price. If eligible, consider opening a health savings account, HSA, which provides tax benefits for medical expenses. Number 12. Refinance your mortgage or loans. Refinancing your mortgage or other loans before a recession hits can free up cash by lowering your monthly payments. This can make it easier to pay off debt or save for the future. To maximize savings, compare rates from different lenders and consider shortening the term of your loan. This strategy can help you pay off debt faster while reducing the amount of interest you'll pay in the long run. Number 13. Cut unnecessary subscriptions and services. Subscription services can add up without you even realizing it. Take the time to review all of your current subscriptions. Maybe the last time you went to the gym was months ago, or you just don't have the time to read that paid newsletter. Many of these subscriptions, like streaming services or gym memberships, can easily be paused or canceled. Prioritize essential services like your phone or internet, but look for ways to reduce costs. You might find cheaper alternatives or bundled services that can lower your monthly expenses. Number 14. Downsize and declutter to save money. During a recession, downsizing your living situation can lead to big savings. Reducing your housing costs frees up money for savings or paying down debt, like maybe moving to a smaller space or cutting unnecessary expenses. A smaller home often means lower rent or mortgage payments, along with cheaper utilities and maintenance costs. Decluttering can also help you save or make extra cash. Selling unwanted items like furniture, electronics, or clothing can generate additional income. You can use the funds to build your emergency fund or invest in more recession-proof assets. Plus, decluttering helps simplify your life, allowing you to focus on the essentials during challenging times. Number 15. Evaluate your insurance policies. Many people pay more for insurance than they need to. Take a closer look at your auto, home, and life insurance policies to see if you're overpaying for unnecessary coverage. Sometimes, policies are packed with extra features you might not need, like high deductibles or extra riders. To save on insurance costs, shop around and compare quotes. You might find a better rate with a different provider. Bundling your insurance policies like auto and home can also lead to discounts. Increasing your deductibles or exploring usage-based insurance could further reduce your premiums without sacrificing coverage. Number 16. Build and strengthen your professional network. During a recession, your professional network can be a lifeline. Having strong connections can open doors when the economy contracts, even if it's finding new job opportunities, collaborating on projects, or simply getting advice. Networking can also keep you informed about industry trends, helping you stay ahead in your field. Start by attending industry events, webinars, or workshops, and don't hesitate to reach out to people in your field. Keeping in touch with colleagues or former employers through social media and email helps maintain those valuable connections. Expanding your network now ensures you'll have support if things get difficult later. Number 17. Focus on skills development. Upskilling is critical when jobs become scarce. Having a broader skill set makes you more valuable to your employer, increasing your job security. Employers are more likely to keep those who can wear multiple hats or contribute in versatile ways. Upskilling can also position you for roles in industries that are more recession-proof, like healthcare or technology. Developing new skills doesn't have to break the bank. Take advantage of free or low-cost online courses through platforms like Coursera, Udemy, or LinkedIn Learning. You can also explore on-the-job training or mentorship programs offered by your current employer. Investing in your skills now will pay off when the job market tightens. Number 18. Reduce transportation costs. Transportation is often one of the biggest household expenses, and during a recession, saving on gas or commuting costs can free up a substantial amount. Carpooling, using public transit, or even working from home are great ways to cut back on transportation-related expenses. To reduce car-related costs, keep up with regular vehicle maintenance to avoid expensive repairs down the line. Look for ways to save on auto insurance too. You may qualify for lower rates if you drive less, or you could explore reducing your coverage for additional savings. Keeping transportation costs in check leaves more room in your budget for savings or essentials. Number 19. Build a recession-proof mindset. Living during a recession isn't just about money, it's also about having the right mindset. Developing mental resilience can help you handle the financial challenges that come your way. Instead of focusing on what you can't control, turn your attention to areas where you can make a difference, like cutting expenses, building savings, and growing your skills. Staying motivated during tough times can be challenging, but setting small, achievable goals keeps you on track. Practice mindfulness or meditation to manage stress, and surround yourself with supportive friends or mentors who can help you stay positive. A strong mindset will help you make better decisions, stay productive, and push through economic uncertainty. Number 20. Invest in home energy efficiency. One often overlooked way to save money during a recession is by investing in home energy efficiency. Simple upgrades like switching to LED lighting, installing a programmable thermostat, or sealing drafty windows can lower your utility bills and provide long-term savings. These improvements not only reduce your monthly expenses, but they also increase your home's value, which can be beneficial if you ever decide to sell. There are often tax credits or rebates available for energy-efficient upgrades, so take advantage of those to reduce the upfront cost of these investments. Making your home more energy efficient is a win-win. It saves you money while helping the environment. Securing your financial future. Preparing for a recession may feel daunting, but breaking it down into actionable steps makes it manageable. Strengthening your emergency fund, paying down high-interest debt, and building multiple income streams are key strategies to protect your financial well-being. Remember, small, consistent changes can lead to significant progress over time. By taking proactive steps now, you can reduce financial stress and maintain stability during tough economic times. The time to act is now, so start preparing today for a more secure tomorrow. Thanks for watching. And if you found this video helpful, don't forget to like, subscribe, and share it with your friends. Also, don't forget the link in the description.